good afternoon, everyone. My name is Kostyal, and today I'm representing Ingenium Alliance, a Hungarian consulting firm. I'm the managing director of this business, and also I'm a certified ESG consultant by the Supervisory Authority for Regulatory Affairs in Hungary. So, since Ronnie jumped to this slide, what we want to cover. Ingenium Alliance wants to do services differently. You can see our service package here. We've moved to ESG solutions, and under ESG solutions, we not only provide consulting, we also provide ESG training and ESG mentoring for the companies, as we have certified ESG consultants. Besides consulting, we also mentor startups, most frequently coming from sustainability backgrounds. And also we organize business events, and as the S leg of ESG is also very important, we are in development of an employee journey program, which combines data with creative events. So let's get to the material at hand. If we move to the next slide, we can see an interesting timeline, which says that since the year 2000, we have seen almost a 700% increase in how many sustainability regulations we see globally. And this number actually is an almost 150% increase if we compare this decade to the last one. Exactly what does it mean for companies? First, it means a new form of compliance. So companies are not only required to report on their financial activities and KPIs, but they're also required to comply with sustainability standards and report accordingly, which of course means an administrative burden as well. The omnibus package has been touched upon by Camilla, so we see a wave of probable simplifications, but still I think this number is quite staggering. And the latest country to adopt an ESG standard is Japan. So Japan recently announced that the country will introduce a new type of standards, which will be mandatory for companies listed on the Tokyo Stock Exchange. If you move to the next slide, we jump back to the European scene. And what Camilla also touched upon briefly, the EU taxonomy regulation is a very important key factor here, because many directives directly touch upon this. This regulation actually defines the sustainable activities and what performance indicators should be reported and classified according to these. We can talk about taxonomy eligible activities, and if an economic activity is on this list, it is considered eligible and is actually able to be modified according to EU standards. What even better is that there are taxonomy aligned activities which directly comply with all the relevant technical standards and also satisfy the do not cause significant harm objective and are fully in line with the requirements of the EU. You might wonder, if you're a company starting your ESG journey today, how can you easily and quickly catch up with the regulations? I will touch upon that a bit later. Another key assessment analytical tool here is what many different directives and national laws also require from companies is the double materiality assessment. So basically, companies are not only required to report on what effect do they have on the environment, but also what sustainability and environment has as an impact on their firm. So we can talk about the financial materiality. It is information that directly affects the financial performance of the company and the decisions. And we can also talk about the impact materiality, which means that information should be reported from the company side that has a significant environmental, social, or human rights impact. In short, we can say ESG impact as a result of the company's activity and operation. So it is the key thing here. And what can you do in order to start mapping up what double materiality aspects you should consider? I have also brought you a small tool. This was made with the help of Pfizer Consulting's Gábor Lőrinc as part of a training series we held last autumn. Here we can see a quick scale in the columns, which covers some key ESG topics. Under the environment, we can see, for example, energy, water pollution, or soil pollution. Under S, we can see whether the company has a fair wages policy, whether work-life balance is somehow supported or even enacted in certain policies of the company. And also in G, we can see, for example, incidents or whistleblowing activities. And based on that, if we want to assess the materiality score, so we want to conduct a short double materiality assessment, we can directly tie it to a certain scale, whether the impact is high, low, or medium, whether the activity is irreversible or not. This can also be measured on a scale, and whether it is probable that the incident might happen or not. And based on that, you can see a quick example that, for example, the fifth factor received a very high score. So this is the first part of materiality. If we jump one slide forward, we can see the other type of materiality, which is the financial materiality. Once again, the same examples. Once again, we can try to gauge how probable is the materiality topic is to actually occur, what extent, so it shows what the extent is of the risk and whether it will affect the financial position of the company on the market. And once again, we can tie it to the financial materiality score. And if you've paid attention, you might come to the conclusion that actually we can tie two different scores. And based on the two different scores, if we jump forward, we can quickly create a quick example, which is also called the double materiality matrix. If it is done right, it should be prepared for short-term, mid-term, and long-term, because of course, businesses should map up the different short-term risks, mid-term risks, and also the long-term risks. And if a certain threshold is applied, we can see that if some materiality topics fall into the upper right quadrant, then of course it should be treated with immediately, or at least assessed heavily as part of the risks. So this was a quick example for double materiality. It shows that one company, if it's on the start of its journey, can already start mapping up what different ESG topics do they have. And if we move forward, I've already brought you two examples which connect back to the EU taxonomy, which I've talked about. The first one is a free accessible tool through the European Commission's website, which is called the EU Taxonomy Compass. What it does basically is it shows you whether the activity that you do, or the project that you plan to do, for example, as a company, how it falls under the 6 objectives that you can see in the rows. So climate mitigation, climate adaptation, water, circular economy, pollution prevention, or biodiversity. And why is it good? Because with a few clicks, you don't have to read through the EU taxonomy regulation to kind of get to the picture of how your activities align with the EU taxonomy. And you can get a clear picture in some minutes if you know what the project looks like, what your business does, and how your activities will look like in the future. And also connected to the EU taxonomy, if we move one slide further, there is the EU taxonomy calculator. So sustainability regulations require companies to report on the aligned and eligible activities also. And it is reported in the form of what proportion of their net revenue, capital expenditure, and operational expenditure falls into these categories. And there's also a free accessible European Commission ensured taxonomy calculator for this. And with a few steps, you can quickly map up how your different activities align with each other. You can also see the example on the slide. This is a small mock-up example, and you can also do this in a few minutes. Why I wanted to show you these 3 quick examples is because I wanted to emphasize that even if you haven't started your ESG journey yet, and you haven't really touched upon what regulations are there, you can quickly do it with these 3 accessible tools, and it shouldn't be a headache for you to start your sustainability journey. And with that, I would like to thank you for your attention. I'm really excited about this collaboration, which we've been working on. And now I would like to pass on the word to Melinda from Borealis.